Expectations a year ago in the bond market, forecast in the market by the Fed, was that interest rates would be increased 3 times to roughly 1% over the course of 2022. So right there is, okay, we got the direction right. Order of magnitude, not even in the same ballpark. So as I say, with interest rates today up 400 basis points, is really all you need to know in terms of what really drove markets. And it ended up obviously setting off, one of the worst bond market returns for an individual year in history. I think for the US 10-year market, it was the worst since 1874. So like really outlier type of performance years for particularly in the bond market. And of course, when the bond market interest rates go up, has that knock-on effect into resetting valuations and other prices. And so the equity markets sell off much more significant than we had anticipated a year ago. But we had anticipated going down. We were selling, reducing exposures a year ago coming into the year because we knew the direction we're going in. As I say, order of magnitude just completely off the charts. Nowhere in my outlook piece from last year, John, absolutely nowhere did I write we were going to have a war. But what I did highlight at the time were the 2 big risks that we had to watch out for last year would be, 1, that inflation is more problematic than expected, and 2, that geopolitical issues might be becoming more of a problem, which I just briefly mentioned, the US domestic politics, China, Russia, and Iran. So got those 2 issues, and those were the 2 kind of, as I say, didn't pay enough attention, they might say, but really the market themes in 2022, the inflation and monetary policy much stronger than expected, and the geopolitical, the Russian war in the Ukraine, which is a geopolitical issue, but importantly, really sort of hyper drove the inflation issue